Rich again with Spokane Home Guy Group. And
Mike Hogan with Chimney Rock Mortgage.
yeah, and we are back again for the August real estate update for Spokane area, as well as interest rates. And we are also going to be chatting about the Fed decision that's upcoming and our predictions around that. And then, since the beginning of the year, and really kind of a little longer than that, we've had some changes to how a buyer and what they might be responsible for as far as compensation around real estate. So we kind of want to talk about that and really talk about it from a lender perspective and how that might affect, the credits that they can get. So we'll jump right into the August real estate market update. For price, very little change. Year over year, we're up just a little over 1%. Month over month on the median sale price, we're just up to 1%. On the average sale price, which is reaching $491,000 for the greater Spokane area, zero change, essentially. So prices are very, very stable. And on your end,
Well, over the last year, interest rates are certainly improved. They've improved over the last month, which is fantastic. They're probably in the best point they've been in about 18 months. And it has made a difference in, what people can afford. So that's really good.
Yeah. I mean, with prices staying the same, rates going down, and we talked about this last month, it makes it a little bit more affordable, or you can change your plan a little bit, whichever you desire.
Yeah, you might be able to afford a more expensive house.
Yeah.
Even if it's just $10,000 or $15,000, that may be the difference between what you really want.
Yeah. Yep. Yeah. And from an activity perspective in the market, that's still staying pretty strong. Like we saw a little over 570 homes close in the month of August, which was down. I mean, it's down 11% year over year. And when we look at the new pending sales, which is kind of our real-time indicator of how much activity is going on in the market, that was up 20% year over year. So a pretty good amount of activity happened in the month of August to really round out the summer month.
Well, it feels to me like activity is up for sure. People are looking with the stable prices. It appears that, buyers may have a little bit more time to choose which house. So they may look at more than one house instead of feeling rushed to have to, offer on the very first house they see.
Yeah. And what we haven't seen is with rates coming down, you would expect, because we don't have a ton of inventory, you'd expect prices to actually kind of increase. And right now, we just have this little, maybe it's a pause in the market on price where, gosh, if you're a buyer, even a seller, you have price stability and more affordability. It's great.
I mean, I really think right now is a very good time to be looking for a house. I mean, we'll talk a little bit about what the Federal Reserve thinks it's going to do and why that rumor has already reduced rates. But, I'm also not in the long school thought that rates are going to be that much better at the first of the year than they're going to be over the next few weeks.
Yeah, I agree. So, I guess transitioning into the rate conversation, the Fed meets this month of September. I mean, what are they expecting?
Well, so for the first time in a long time, the Fed had their big meeting in Jackson Hole in August, their big synopsis they have every year, and the Fed Reserve Chairman came out and said that he thinks it's time to start reducing rates. I think a lot of economists and everything have been talking about that before, but for him to actually say that, it's basically showing that they are going to be reducing their rates and their announcement here in about 10 days, which obviously will have a direct relate on borrowing for like cars and credit cards and those sorts of things. But it also will show that inflation is coming down, and that's the main driver with mortgage rates. So, rates have really been, like I said, the best spot they've been in about 18 months and approaching nearly 2 years.
Yeah. So, I mean, you hear rumors of, 25 basis points or 0.25% or 0.5%. Any prediction on what they're going to do?
I think most, I think most people are priced in that they believe the Fed will lower by 50 basis points, right? So anything greater than that would be a surprise and probably would help rates. Anything less than that would also be a big surprise and would have a more negative effect on mortgage interest rate than even a positive news would have.
Yeah. So what I hear from that is the market's anticipating, and when I say the market, interest rates, bond market, they're kind of priced in the anticipation of a 0.5% reduction in the overnight rate. Does that necessarily? I mean, if they come out and do 50 basis points, does that reduce mortgage rate?
I don't think it'll have an impact, a significant impact on mortgage rates. Oh, excuse me. And the fact that the market is already priced in the bonds. I mean, when you're buying bonds, you're committing to buy bonds 30, 60, 90 days away. So they've already priced in that change.
Yeah. So if we get 50 basis points, probably priced in, not much of a change. Something less than that, probably not favorable. Could see rates jump up.
Yeah, I think you could see rates go up. It would be a sign that they are still worried about inflation more than, I would hope they would.
And more than 50 basis points, that's a positive thing.
And it would be a positive thing, but I don't know. I think the risk of, like, if you were in a pending agreement now, I think the risk of rates getting dramatically worse if there was bad news coming out of the Fed is great and far greater than the positive that could happen if they come out and reduce rates.
Yeah, gotcha.
I mean, if I was pending under a contract, that'd be looking a lot more.
Yeah, yeah. So if you are actively out there looking and you're kind of trying to time the Fed decision with your purchase contract, the advice would be lock in your rate. At least you have some certainty now. If they don't do what's anticipated, that's not great for your rate. Correct. Yeah, yeah. I'm kind of in the same boat.
And I also don't think in long term that there's going to be. I do think the Fed may reduce their overnight rate again when they meet in November. So that's going to be overshadowed by the elections, and typically elections don't have a dramatic positive influence on mortgage rates.
Yeah. Yeah. So we have that to deal with too over the next 2 months, I say. And so So let's pivot just a little bit and talk about just kind of being a buyer in this market right now and really in the state of Washington. And there's other states that have made changes to where you now have to have a buyer services agreement to work with an agent. And what you have the ability to do is negotiate with your agent the amount of compensation that you're willing to pay. So whether that's a 1.5%, 2%, 3%, whatever that number is, not set in stone, you have the ability to sit down, negotiate that, enter into a buyer services agreement. And on the other side of the coin, even though it's never been, this like the rule, like the seller does not have to pay a buyer agent compensation. They never have. They can offer it. And so in the event that they're not offering it and they offer the buyer, 3, 4, 5, 6% in seller credits or concessions, a percentage of that might go to the agent. So how does that affect lending?
Well, so traditionally speaking, and not getting into great detail, FHA and VA and USDA typically will allow for up to 6% seller concession toward buyer closing costs. Conventional is more like 3%, unless you put 10% down, then it's 6%. As you mentioned, from a lending standpoint, there isn't that much that's changed with the buyer's representation agreement, and we wouldn't use a lender if the seller was willing to pay the 2%, 3%, or whatever that number is, and the buyer agent commission, that wouldn't go to that 6% or 3% limit.
Yeah.
I mean, really, from our standpoint, it's always been paid by the seller. So if the seller's paying for it in a little bit different way, it's been that same way for a long time.
So what if the seller offers 6%? They offer 0% to the cooperating agent, but for whatever reason they're offering 6% to the buyer, FHA loan, 6% to the buyer.
Then the buyer could choose to use part of that 6% to compensate their agent, for sure.
Yeah.
Yep.
Yeah. What is the other? I mean, so from like a mortgage perspective, what's the typical amount of closing costs that a buyer would need?
Typically be between 3% and 4%.
Okay.
It kind of depends on the size of the loan. And, some of the costs are really fixed, right? So on a $300,000 loan, an $800 appraisal is a much higher percentage than it would be on a $600,000 loan. So there's not, the school of thought would be more in the 3.5%, 4%. But as you get bigger loan amounts, then obviously that number would come down.
Yeah.
And then the other thing from the lending standpoint that's a change for us is if the buyer agrees to pay a portion of their agent's commission out of their pocket, I think the right thing for us to do is disclose that on our loan estimate. So when the buyer's asking how much cash they need to close, it includes whatever that cost they're paying their buyer's agent. as you're moving forward, we know how to do it. We know how to disclose it. We will disclose it, but you might want to make sure you're asking, hey, I've agreed to pay 1% of the buyer's agent commission. Is that involved in the number you're working with?
Yeah. Yeah. So a little extra communication between the agent and the lender and the purchaser is needed. So yeah, so I mean, I'd say, overall, like a pretty good month of August. I mean, we had price stability, saw activity pick up for the month of August. Rates have kind of
Improved.
stayed
Yeah.
pretty good, if not improved. And then we have the Fed decision here in 10, 11 days, and hopefully that is some positive news, and you see a little bit better bump in rates for people that are out there looking.
Yeah. No, I think, like I said earlier, I think it's a great time to be looking to buy a house.
Yep. As always, I mean, we can be reached on the real estate sales side of stuff at 509-990-SOLD. Love the opportunity to sit down and do a free buyer game plan consultation. And you guys can be reached at...
Yeah, we can be reached at 509-747-1300. Once again, we'd love to sit down with you and figure out what you can do, what you can afford, and what to buy. And we can also do that with someone on the Spokane Home Guy Group, so you can hit us both at the same time.
Awesome.